Hey guys, what's up? This is Francisco with Valarizo Capital. And today we're going to do a market update. We're going to take a look at some of the sectors. We're going to take a look at the indexes. And we're going to try to understand what the market is telling us right now and what is going to be the next move in the upcoming weeks and probably the upcoming month. So let's take a look at some charts. And remember, guys, that this is not financial advice and the video is based solely on my personal opinion. So thank you so much for being here with me. So now let's start looking at some charts. Here in my screens, I have the SPY, the SPY right here. And we can see, right, that we had actually a pretty brutal day, right? Market was down somewhere around almost 3% just on Friday. And of course, we had a really strong move all the way down, all the way up to the 200 DMA, which is the pink line in my charts. And just for you guys who have been following me for a while, I usually do my videos. I usually just do them with the volume, with the enhanced volume by Trader Lion. And I usually look at the chart with just the moving averages, right? I have the 50 DMA, which is the purple one. I have the 21 EMA, which is the blue one. I have the 8 EMA, which is the orange one. And I have the 200 daily moving average, which is the pink one. I decided to also include in my videos the TTM Pro Squeeze and the MOXIE indicator, which are the two indicators that I always use in my charting. I always use them to finding opportunities. And the reason why I was not putting these indicators in my videos was because I wanted to make them a little bit easier. However, I think I can give you a better explanation of my ideas and what I am actually looking at the charts if I include these indicators in the videos as well. So from now on, I'm going to include these indicators, and I'm also going to explain how I use them in my daily charting and all that kind of fun stuff. So right now that we have cleared that, let's move into the chart. So here's the SPY once again, and you can see right here, right, clear rejection at that 200 DMA. And with what is actually pretty interesting is, for you guys that have been following me, you know that I use the simpler trading quant pivots, and these are basically pivot points that the quantitative computers and algorithms are looking at for some selling and buying, right? And we can see that the market stopped right there at that level, at that weekly level. That's the H2, the high 2 quant pivot weekly level, and we can see that the market stopped right there at the beginning of the week. And basically we have a move all the way down almost to that L2, which is low 2 in the quant pivot level. So that's actually pretty interesting, right? Seeing that those levels, they usually work a lot, and and every time that I trade, I'm using these levels more in my trading, and I have found a lot of success. These levels were designed by John Carrett at simplertrading.com, so you can take a look at those levels and the indicator if you want to. So now coming back to the charts, let me just remove the quant pivots for a second right here. And yeah, we can see that the market basically rejected at a 200 daily moving average. And we can see, right, we had a squeeze that is pointing lower. And what is really important to understand is, right, the price was above that 50 daily moving average. However, the MOXIE indicator continues to trade below zero. And that's actually a huge warning sign. I didn't listen to that warning sign much myself because I did have some long positions somewhere around here. And of course, I got a stop out. I respected my stop, so everything is good. But I'm gonna start to listen at the indicator more, right? It's an indicator that I incorporated in my trading just a couple of months ago, and I have found a lot of success using the indicator. So that's actually pretty cool. So right now, just giving a quick summary, right? We have a gap on fill below. We have a squeeze that is pointing lower, and also the MOX indicator continues to trade below zero. And we actually have selling in increasing volume. So what is the expectation? The expectation is that the market is going to come here and it's going to at least fill this gap. Can something else happen? Of course, anything can happen. But for now, my indicators and price action is telling me that the market wants to head a little bit lower. Now let's move quickly into the QQQ. And basically we have the same thing, right? We have actually, you can see, right, the MOX indicator was below zero, the daily MOX indicator, so price should not be above the 50 daily moving average when the MOX indicator is below zero. And the MOX indicator, for you guys that don't know, the MOX indicator was developed by TJ Watkins. You can also find him at simplertrade.com, and he's actually a pretty amazing mentor, and I have learned a lot of things from him. So basically, the MOX indicator is a momentum indicator, and usually you want for a sustained uptrend, you want the MOX indicator to be above 0. So you can see that the MOX indicator continues to be below 0. We have a squeeze that is pointing lower, and now price got rejected right there at that 50 daily moving average and that 21 exponential moving average, and we continue to sell in increasing volume. What is the expectation? The expectation continues to be a move down to fill this gap down here. Now let's take a look at the IWM, and what is actually interesting about the IWM, right? The IWM, right, the MOX indicator tried to go above 0 when the price was trading above that 50 daily moving average. However, price is now right again below 0, and we have a squeeze that is pointing lower, and the selling is accelerating in volume. So this continues to be a bearish chart, right? And what is really interesting is that this was the first close. This was the first close above that, somewhere around that level, right? We actually had one somewhere around here. So basically, this is the second time that we have a close somewhere around this 192 level. And there's actually a possibility that we're gonna have a move below this, right? Watch below. We actually close below here. One bullish scenario could be if we get a close below here, and then we get a close above here, and that actually act as a bear trap. That could be in a scenario, but is kind of unlikely. And for now, the price action is telling us that this wants to move lower, right? So we gotta respect that, and this continues to trade in a range. And let's see, we will see if this range actually breaks. And what is pretty interesting is that if we actually break that level, the next level of support is all the way down here, right? This is all the way right here. Usually we don't have much volume when we have a straight move like this. There's usually not much volume. So most of the volume is going to be somewhere around the 170 level. So that is with that. Now let's take a look at the DIA. And this is actually a chart that kind of fooled me. I was looking for this consolidation right here to continue higher, but we can see, right? We can see that the MOX indicator is below 0. We have a squeeze that is actually pointing lower and might trigger to the downside, and the selling is in increasing volume, and we got a rejection right at that 200 daily moving average, and this is actually a double top short setup, and the double top short setup triggered the moment that we close below this top right here. And that double top short setup, if you want to learn more about that setup, that is a setup that I learned from Gil Morales, who was a portfolio manager for William O'Neill. He has written a lot of books about the short setups, and one is shorting with O'Neill, learning to short with the O'Neill disciples is an amazing book if you want to take a look at it, and you can learn more about that double top short setup. So that's with the DIA, also looking bearish. And now let's go with growth. Basically kind of the same chart, right? MOX indicator is below 0, squeeze is pointing lower. We're getting selling in increasing volume, and basically, right, the 50 was acting as support right here, and now the 50 DMA is acting as resistance, and we're getting more and more volume to the downside, and this is increasing. So let's see if next week's bulls are able to hold this level. But for now, price action is telling us that this market wants to move lower. Now let's just talk about the SMH. I don't think there's a lot about to talk about the SMH. Basically, right, we got rejected at that 21 exponential moving average. Squeeze pointing lower. MOX indicator continues to be below 0. So remember, price should not be above the 50 daily moving average when the MOX indicator is below 0. That's something that TJ calls an inverse trampoline move, right? So just imagine you throw a ball to the ball is just gonna come back instantly, just like a trampoline. And that's basically what happened, right? We got price above that 50 daily moving average, but the MOX indicator was below 0. And now we're getting that strong move to the downside. From failed moves come fast moves. And that's exactly what we are seeing. Now let's take a look at the XLK. And just nothing much to say, right? We also got, right, inverse trampoline here. Price should not be over the 50 when the MOX indicator is below 0. And now the squeeze is pointing lower, and price got rejected right here at that 21 exponential moving average, and that 50 daily moving average in increasing volume. So this one is also looking pretty bearish. Now let's take a look at I want to take a look at some of the sectors that I was watching in last video, and also going to look at the commodities that tend to move those sectors. So let's first of all, let's start with gold. And right, a lot of people load up in gold somewhere around here. A lot of people load up in gold somewhere around here. And right, gold is starting to move down, and this is the first close below that 50 daily moving average. And right, this is the first close below that 50-day moving average since, what is this, since February, something around February. So that's actually kind of a changing character. I don't see huge volume, but sometimes volume comes after the move or something like that. And for now, you have to respect price. And if price is below that 50 daily moving average, I don't think there's a need to focus on gold. Maybe this is going to continue basing, but this right here is a change of character, and that is telling us that there's not a trend in gold anymore. I thought that this was a little bit of accumulation and that we were ready to break out, but that doesn't seem the case. And the squeeze is starting to point lower. And you can see as the price was moving sideways, the MOX indicator was actually moving lower. And that is a caution signal if you want to be long. Now let's take a look at silver. And very similar action in silver, right? We can see right here, right, that the 200 has acted as resistance, support. Maybe it's going to act as support again. We have to see. But basically kind of the same thing, right? Price moving sideways, the MOX indicator moving lower, and now the squeeze tried to fire to the upside, is losing momentum, and this is likely to continue to fire low. And this just seems like a failed breakout in the metals. This seems like a failed breakout in the metals. And if we get a close below that the 200 daily moving average, watch below, right? Watch below, because I think that's going to be a failed move to the upside, and that silver is going to move right back down. And now let's take a look at the GDX ETF, which is right here. And this is actually this, right? You just can't fight this, right? You just can't fight the tape. We had a pretty strong move, right? All the way down here, right? Basically respecting that 21 day, respecting that 21 day, respecting that 21 day, boom, we broke it on increasing volume. We broke that 21 exponential moving average. That's a changing character. That's a completely changing character. And we can see right now that we just lost that 50 daily moving average. Also on high volume. So even if this bounce, I think that you take the opportunity and short that 21 exponential moving average and continue to look for more downside in GDX. And you can see that the squeeze is pointing lower and the MOX indicator is starting to decrease. So maybe we will continue to decrease, but based on this price action, I wouldn't be buying a dip in GDX for now. Now let's take a look at USO, and you can see right the break of this trend line. I thought that this was going to move pretty considerably to the upside, but right, the MOX indicator was speaking to us, right? This was moving sideways, MOX indicator moving lower. We continue to have a squeeze and the volume is kind of drying up. And as long as this continues to hold the 21 EMA, maybe there's a possibility that USO will continue to consolidate and this squeeze is actually going to point higher. But I will just want to wait a little bit, right? This 50 daily moving average is going to be the line in the sand for me for USO. If we happen to close below it, especially on increasing volume, I think that the trend in crude oil is done, at least for the short term, right? But if we continue to hold this 21 exponential moving average and we hold this 50 daily moving average, then probably there's a probability that USO will continue higher. But be really aware, right? You just need a moving average in the chart. If we fail at that 50 daily moving average, watch below for crude oil as well, and just try to keep things very, very simple. This is XLE, right? And you can see right here, right? Price was moving higher, but look what the MOX indicator was doing. It was actually moving lower. And you can see that we have been on a squeeze like forever. So usually that's not a really good sign, right? We were holding the 21 exponential moving average. We held it on Thursday. However, we completely lost it on Friday. And this is the first time that we actually closed below it since kind of a long time, right? We kind of closed it below here, but then we had this really, really strong move. But it's actually probably somewhere around December, right? That we haven't closed below that 21 exponential moving average. So that's a changing character, right? Maybe you can buy a dip to the 50 daily moving average. Maybe that's viable, but like the really strong trend, I think is over, at least for now. So that's what XLE price action is telling us. And now let's move into some of the other industries that we're watching. And there's something that I want to show you here, right? A lot of people is talking about XLP, kind of a really defensive sector, kind of a risk-off sector. And what is really interesting here, and I don't know how powerful is this gonna be. These are the monthly levels of the quant pivot levels. And you can see that we stop right there at that H2, which is the high 2 monthly quant pivot level. And you can see the statistics right here, right? These are the statistics. Let me just move this chart so you can see it a little bit better. Here are the statistics and the chance, right? The chance that we actually touch H2 is only at 21%. This is based on 124 months. And the chance, the probability that we close above it by the end of the month, we're talking April right here, is only at 12%. So there is actually somewhere around a 90% that XLP is going to pull back, or at least don't close above that level. So we have to see how that plays out. Do that means that we're going to see a move of equities and we probably see some rotation? I don't know, but it's actually something important to know, right? Because we can see that this usually tends to move up. The equity market tends to struggle a little bit, but we will have to see. And let me just take that indicator out of the way. Now let's move into the next one. This is XLRE, right? The real estate ETF. And this one is actually performing right? You can see that the MOX indicator is above 0. You can see that this has been steadily rising, which is actually pretty powerful. And right, we are above a 50 daily moving average. And this is something that I love, right? We got to move above that 50 daily moving average. We had a test of that 50 daily moving average. And now we tested that 21 day and now we're moving higher, right? So you can see, right? If we compare this to the SPY, right? The SPY is basically trading near the lows and these of the lows of February. And this one is trending above a 21 EMA. So I think that you focus on this one. I think that you keep this one on your chart. Look for some really strong names on the XLRE sector. And let's see if this one can continue to consolidate sideways while the market continues to correct. And I think this should be a place to focus. So keep this one on your watch list as well. And now let's move into the next one. This is XLV. I didn't mention XLV, right? I was mentioning XLV a little bit on my past videos, and you can see, right, we had a double top here and we actually had a double top short setup. It was triggered right this day when we closed below that breakout level, and right, we got a really strong rejection at that 21 exponential moving average. However, the pullback is coming right into a 50 daily moving average and a 200 daily moving average. We're starting to squeeze and the MOXIE indicator is above 0. So I think that while the market continues to consolidate, to correct, and all that kind of stuff, I think that you keep XLV on your chart, on your watch list. Keep XLV, watch some of the strongest names on that sector, and watch it, because this chart, it seems like it's broken. However, it's trading above a 50 daily moving average, and maybe we will get some continuation here. Now let's take a look at XLV. This is the materials ETF. And this one, right, kind of the same thing, right? We didn't get all the way to the short setup territory. Maybe you can use this peak and this actually trigger the short setup. However, this one is right. It pulled back right into a 50 daily moving average, MOX indicator above 0, and we have a squeeze. Will this hold? We actually don't know, right? Maybe this breaks. Maybe this will break that 50 daily moving average and will break that 200 daily moving average, and this will just continue to move lower. So we will have to see, but I think that this should be a sector that you continue to keep on your watch list as long as it continues to trade above that 50 daily moving average, because you can see that since we move above it, we haven't tested, and this is the first test of the 50 daily moving average. So that's normal price action, at least for now. So that one is pretty interesting. Kind of the same thing for XME, right? A lot of people got really scared about XME. And yeah, of course, a lot of people were loaded here. We basically hit a lot of stops. However, this is the first test of the 50 daily moving average, right? Since the breakout right here that was on February, right? We have been trending 21 day, 21 day, 21 day, 21 day, and this is the first test of the 50 daily moving average. Maybe this is a golden buying opportunity. Who knows, right? But keep this line in the sand, right? If you get involved in this name, just have a stop below the 50 daily moving average. See what happens. Manage your risk correctly, right? We will know next week if this level actually holds, but I think it's kind of an interesting opportunity. So I think that you should also keep this one on your watch list for strong ETFs, and we will continue to see. Then finally, a last ETF that we're going to review is the UNG, which is the natural gas ETF, and this one has been right. This one has been on a pretty strong trend, right? Basically, we tested the 21 here. We just had a very, very strong move. We broke above this level, and now the question is, are we going to hold this breakout level? I think this is a beautiful place to manage risk, right? We're coming into a 21 exponential moving average, MOX indicator above zero, a squeeze pointing higher. Right now it's consolidating, but it's not below zero. And you can see the pullback on decreasing volume. I think this one looks pretty nice. Maybe you can wait for some consolidation and then a push higher above a pivot. Maybe you can do that, or you can buy the dip and just set your stop below the 21 EMA. Maybe you get a stop out, maybe you won't. But those are two ways that you can manage risk. The most important thing is, if you're going to buy the dip, set a stop. Just set a stop or wait for some consolidation and then buy a breakout. But keep this one on your watch list because this one is looking pretty, pretty good. And then finally, let's take a look at the VIX. And what I find interesting about the VIX, and I'm going to show you right here, the VIX is actually testing that monthly L1 level, monthly H1 level. So the probability that we touch this level is 46%, and the probability that we close it, the probability, right? Let me just move this, right? The probability that we touch that level is 43%, and the probability that we close above that level by the end of April is only 16%. So that means that there is somewhere around an 85% that the VIX is going to close below that level by the end of April. Of course, it could continue higher, but the probabilities are telling us, based on 124 monthly periods, that most likely the VIX is just going to come back. We of course will need to see, but something that I'm also seeing here, besides being at this level, is that the MOX indicator is below zero. We do have a squeeze that is pointing higher. So price should not be above the 50 when the MOX indicator is below zero. But we will have to see, right? We will have to see. And let me just take a look at the UVXY. Let me just take a look at the UVXY. And for the UVXY, for example, the UVXY has a little bit more room. We have a squeeze. We have a lot of volume coming into the UVXY. MOX indicator is above zero, and we're coming into that 50. So kind of mixed signals, right? Kind of mixed signals here. Sometimes the MOX indicator tends to work better in the UVXY. So I will have to trust this one a little bit more. However, the pivot labels, they usually tend to work pretty nicely on both. So we will just have to see. So for now, right, the market is very, very mixed. We basically have a market that is below its 50 daily moving average. There are some sectors that are trading above those 50-day moving average, as we just saw, but I think they're easy environments, right? There's a there's some traders that mention, and I think this is actually pretty true, right? Some traders know a good setup, but few traders know a good environment, and that's something really, really powerful and really, really important to understand. Most of the times, your stock picking abilities are not as important as your sitting power to wait for a good environment to trade. Because most of the times when you're trading in an environment that is just flowing, you can basically buy anything, but of course you want to pick the best charts. But a good environment is more important than a good chart, and that's something really, really important to understand. And for now, the environment is bearish, right? If anything, you want to short the rips, or just wait in cash for a better environment and better opportunities. So that's going to be it for the video, guys. Thank you so much for watching. I think this one was a little bit long, but I think it's really important for me to also incorporate some of the indicators that I use so I can give you a better explanation of why I think that the market is going to move in a certain way. Of course, all of this is based on probabilities and nothing is for certain. So just keep that in mind. And thank you so much, guys, for watching. Have a good one. Have an amazing, amazing weekend. And I will see you on future videos. Thank you so much, guys, for watching, and peace out. Bye.